Greetings, folks. This is DC Investing. I've reached financial independence and I'm talking about topics that may help others on their path to financial independence. And right now I wanted to give an update on a margin investing strategy that I've been using this past 6 months or so. I realized that there was an opportunity to have what's called like a dividend arbitrage, where if you borrow money and it pays one dividend, but you pay your margin interest rate is lower, you kind of harvest the difference between those two. So I've been toying around with that this year. I transferred some of my stocks out of Fidelity and moved them over to Robinhood. And the reason why I did that is because Robinhood has really great margin interest rates. And so as of right now, I think I've moved over about $300,000 worth of stock from Fidelity to Robinhood, and that creates the basis for my margin investing account. And just when when you move assets, you don't have to move your entire account. You can strip out pieces of it. And when you move stock from one brokerage to another, it does not create a sale event where you might have to pay taxes on the gains or the losses there. So you just move them straight from one to another. It's pretty easy. I did it kind of in pieces all throughout this year. And so I moved about 300 grand over. And then of that, I borrowed kind of slowly throughout the year when I thought I liked some stocks. I borrowed $203,000 from the margin account to buy more stocks. And so really the value of my margin account is just under $500,000. And I'm kind of keeping it near that level because of the SPIC insurance limits. Should something happen to Robinhood, they go bankrupt or something, the SPIC will cover, $500,000 worth of securities and things. So I'll continue to monitor that, but I won't move my whole portfolio to Robinhood. I just don't trust them enough. But for this experiment, yes, I did. So I have, I did a summary today. I borrowed $203,000 and I bought 5 or 6 stocks. Let me see. I bought Western Midstream, ticker WES, Plains All American, that's ticker PAA, USA Compressions, that's ticker USAC. I bought DKL, that's Deletic something. This is the pipeline of it. WLKP, that's the pipeline for Westlake Chemical, and BSM, Blackstone Minerals, something or other. These are all midstream partnerships. So I'm going to get a K1 statement for each of these. And, I know how to deal with K1, so it's not a problem for me. So those are the things I bought. I own, like the heavy hitters are Western Midstream and Plains All American. I think I have about 90,000 in Western and 60 something thousand in Plains All American. So it's heavily weighted towards those two because those are the ones I like. But the other ones, as prices got kind of low, I was sort of interested in those. So picked up a few more shares. So originally, earlier in this year, I called this video my $4,000 a year dividend arbitrage margin investing strategy, but it's actually increased. So now I'm going to make $9,000 a year with this strategy. And so how that happens is the margin interest rate is only 4.75% for me at Robinhood. It kind of goes down the more you borrow, and if you borrow more than $100,000, then you get that good rate. So it's lowered a couple times this year as the Fed has reduced interest rates. So it went from 5.25 down to 4.75, which I think is really great. But on average, when I sum all of these different stocks together, they pay out about 9.3% in a dividend. So they're paying 9.3, but I only have to pay 4.7. And so that yields a difference of about 4.5% of a dividend arbitrage that I get to keep. And so, I kind of did a summation today, and about $9,398 is what I'm going to clear right now as I go through this throughout the whole year. I've only been doing this for about 6 to 8 months, so I haven't received that huge amount, but we just got a dividend payment as of today. Today's November 14th, and several of these kind of paid really well. So I think I got a couple $1,000s from Western Midstream, and PAA paid $1,000 or something like that. And so I kind of decided I'm going to halt my margin purchasing, but just kind of let the the payout sort of reduced that margin debt a little bit. And so there'll be at least like $3,000 or something, 2,500 that comes in from these dividends, and then I'll just pay down that margin. I'm also getting dividends on the things that I put into the account. So the 300,000 that I moved in also pays a bunch of dividends too. So I may just, instead of taking the money out of Robinhood, I may just let it pay down my margin a little bit more right now. But it's kind of interesting the feelings that this strategy kind of brings about. I've never been a person that borrowed a whole lot. I try to pay off my debt as quickly as I can because I don't like paying banks money. But what's interesting is with this arbitrage strategy, because I'm borrowing, I'm actually making more money than I would if I didn't borrow. And so, like I said, over this course of this whole year, my margin difference should yield over $9,000 and put that in my pocket. And then also the stocks have appreciated slightly. And so, one of them, I think my investment in Westlake Chemical has been terrible. I've lost just under $2,000 on those particular purchases because that stock's just cratered this year. It's still paying out a dividend over 10%, but the stock is down. But if you add in gains from all the others across the whole thing, I'm actually up about $4,600. So even with that loss, my share prices have appreciated about $4,600, and by the time a year goes by, I should make an extra $9,300 for the year. And so those are just kind of interesting games that I'm playing, using other people's money to make a little extra here. So my things have appreciated by $4,600. I should have a $9,000 dividend arbitrage, and I didn't have to work for this extra 200 grand. I'm just borrowing it. And if the market crashes, that's not good. When things kind of went down a little bit recently, I kind of thought about, hey, should I just sell everything and pay off this margin account? And if everything craters, I'll be wishing I did that. But if everything doesn't crater, if everything keeps going up, then slowly this dividend difference will slowly repurchase all of the 200K that I borrowed. I kind of estimated it'll probably take about 10 years to do that, between paying off the margin interest loans, if the companies kind of increase their dividends a little bit every year, if the stock continues to appreciate. Just real conservatively, I estimate that in about a decade, this 200,000 that I borrowed will just become completely mine, and I didn't have to do any work for it other than watch this margin account. So it's kind of an interesting strategy. It's not for everybody. It's not financial advice here, but it's something I'm trying. I'm only borrowing, less than 10% of my whole account balances. So, I've got other funds. Should the markets go south, I can cover this margin debt so that I don't get a margin call or something. But I'm toying with it, having fun, and it's kind of interesting using just what I know about financing to make an extra $9,000 in a year when I didn't have to come up with the capital to do that. So there's kind of a summary. My new thing is making $9,000 a year with a margin interest strategy, and it's not too bad. It's not huge money, but it's more than the average person probably makes by their day job kind of extra thing. I don't know how many hours that would turn into, but 9 grand isn't chump change. It's something that you can use in your life, and this should work year after year after year. So over the course of 10 years, if I make 200 grand, then that's good. So like, subscribe. Hope this helps you guys, giving you some ideas of different investment things you can do in your own investing lives. I told you the tickers of the things I invested in. I think they're all interesting stocks. There's some others that also have decent dividends in the oil pipeline segment you might want to look at. The arbitrage isn't quite so good with those, like Energy Transfer, Energy Production Partners, or MPLX, or Sunoco, or what are some of the other ones? I don't know. You can look those up, but all opportunities. Hopefully you get something out of this video. Like, subscribe. Thanks a bunch. Bye.